My name's Elizabeth Fernando and I'm the Chief Investment Officer at Nest. Markets were in optimistic mood in the third quarter and many stock markets made new all-time highs. Investing is difficult because markets anticipate what is coming down in the future, what the future state of the world is likely to be for the economy, for corporate earnings and for interest rates. And during the third quarter, we reached the conclusion that the outlook for the AI and the tech ecosystem that surrounds it was going to be better than we had previously thought and more profitable. We saw substantial share price gains for a number of companies, including Oracle, Apple and ASML in Holland, and that led to overall market buoyance. At the same time, we also got updates from a variety of companies on their second quarter earnings and their outlook statements. And those came in better than expected as well. And it appears that the impact of the tariffs and the trade wars that we were fearing have been less than expected. So that was supportive for markets. Our flagship target retirement date funds, where 98% of our members are invested, had a very good quarter, helped by the strength of markets across a wide variety of asset classes, including equities, property, as well as fixed income securities such as bonds. Our 2065 funds and our 2045 fund over a one-year period both returned around 11%, and the 2025 fund, which is for members who are very close to retirement, returned in excess of 8%. Over a 5-year period, on an annualised basis, the 2065 fund has returned around 7%, the 2045 fund almost 9%, and the 2025 fund around 5.5%. All of those returns over both the 1-year period and the 5-year period are ahead of the benchmarks that we set for them. If you are interested in more of our performance data, you can read our quarterly investment report, which is published on the website, and that contains returns for the fund choices, as well as more detail on those target date funds. Markets are very highly valued at the moment, and that makes them vulnerable to disappointments. To continue moving higher, we're going to need to see corporate earnings continuing to be revised up. Some of the data that we're getting is also deeply confusing because of changing ordering patterns as people tried to beat the arrival of tariffs and higher prices, and that's making it quite difficult to see through at the moment the strength of the underlying economy. And then the third thing we're keeping an eye on is governments and budgets, where in the UK and France in particular we have had some challenging budget deficit situations, and governments are going to have to work out how they're going to make that debt situation sustainable. In the US, all attention is going to be on the Federal Reserve, which has come under repeated attacks from President Trump on its independence, and speculation will be growing about who Trump will appoint as Powell's successor when his term ends in 2026. We could get an announcement on that as soon as December of this year. At Nest, we have just published our 9th edition of our annual Responsible Investment Report. That gives an update on the activities we've undertaken over the last year to make sure that your investments are invested in a sustainable and responsible manner. You can read more about that by downloading the report from our website.